Morning.
Hello.
Morning.
Hello. Hi.
Morning. Just letting a few more people in as they come in. Lovely. We'll make a start because I think there'll be a few more trickling in, but I'll let them in and I'll just start on the intros. So welcome everybody to Sector Focus Finance this morning with AC Mole. We've got Lexi Shaw and Amanda Gunter here to talk through some exciting measures, coronavirus measures, and the outcome of the budget last week. So what we will do, we'll go around the room and get you to just do a short, brief 10-second, 20-second introduction to yourself, what who you are, where you're from, and why you're here. And then we'll hand back over to Lexi, who's going to go through a presentation. I will record this, so I'll send the recording out after the event. And if you don't want your details shared, just put a note in the chat. But if you don't, I will share all delegates at the end as well. We'll make a start. I don't know if anyone else is coming in, so I'll make a start and go around the room. So I'll go around the room from Deborah, if you'd like to start us off.
Morning, everyone. Hi. I'm Deborah Hyde. I'm the founder and director of April People, which is a people management and HR company based in Somerset, obviously. And I specialise in the area of employee relations, employee engagement, workplace mediation, and people management training around those areas. So I spend a lot of my life helping companies with complex and sensitive grievances. For me, there's a really clear link between employee relations, so the redundancies, the grievances, the disciplinaries, etc., and employee engagement within a business. If the engagement goes up, you tend to have less of the employee relations stuff. If you look at a business with high employee relations issues, they tend to have not so great employee engagement. So that's why I've specialised in those areas. And that's April People, really. Good to meet you all.
Deborah. Lovely to see you, thank you. Robert Pazio.
Hi, good morning. I'm Rob Brown from Lewis Brown. We're chartered land surveyors. We sort of specialise in mapping and producing 3D models of land and buildings and things like that for a range of clients all over the southwest. I think one of my clients is on here now. I'm here really as a non-finance manager of a small business to learn and understand more about the taxation and from the budget and things like that, and how I might improve my understanding of the management of it going forward, knowing that the corporation tax and things like that is big announcement going up, and how I might be able to handle my finances a bit differently. My office manager has recently completed an apprenticeship in finance anyway, and she sort of knows a lot more than I do now. But it's about the management side of it for me, and sort of the overall picture and where we're going, where we're headed, so that we can plan a bit better as opposed to be reactionary.
Lovely. Thank you, Rob. Robert.
Thank you, Laura. Robert Topazio, Finance Director at Strongbox in Taunton. We are house builders, property developers. And my interest is that I'm interested in being involved in the chamber. I've always had a conflict. I haven't always been able to join on events. So when this one came up and the timing was right, I thought it would be important for me to show my face. Also very interested to hear actually from the other attendees as to exactly what's of their interest really. And some of the conflicts and some of the challenges that we're facing as we start to come out of the COVID restrictions. So it's really just a listening remit from myself.
Lovely. Thank you, Robert. Neil?
Hello, good morning, Laura. I'm Neil Vinnigan from Begbie's Trainer. I run the Taunton, Bath and Bristol office, and I'm an insolvency practitioner and restructuring practitioner, and deal with companies and individuals and try and stop them and stop them going bust, putting it mildly. So anything financial and restructuring, budget changes, any type of refinance. My colleague Mike's on this call as well, so I'm stealing some of his thunder. But yeah, that's our angle, is to try and help businesses and individuals not go bust. The issue, of course, is they come and see us far too late in the day, but early advice is the best thing. So I'm all ears on the financial stuff. Thank you.
Great, thank you, Neil. Morning, Laura.
Hi, nice to meet everyone. I'm Laura Joyce and I'm a financial planner. So I work with business owners and other professionals to help them plan their finances going forward. So looking at the big events in life and how we can ensure that they can be achieved, but also how they can work with the current regulations to make sure they're investing in a very efficient manner. So I have heard some of this presentation before because I was at the Clark Wilmot event last week, but there's some really interesting points within it, and particularly around grants for business owners. And I just want to make sure that my knowledge is fully up to date so I can support my clients in getting back on their feet after COVID.
Yeah, great. Thanks, Laura. Mike Dyer.
I won't echo. As Neil said, I work with Neil at the Begbie's Trainers office in Taunton, Bristol and Bath. And yeah, very similar to him and all of you, just any updates in the financial world is at the minute is really relevant to us. And it's always good to keep on educating ourselves. So that's just, yeah, I'm here to listen and learn.
Great. Thanks, Mike. Victoria?
Good morning, everyone. I'm a commercial relationship manager at NatWest. So I manage a portfolio of business clients locally. I suppose I'm just joining as a local professional. You know, the last 12 months has obviously had a massive impact on businesses. So, you know, I see my role, our role, you know, it's so important to help clients navigate out of this and to give the right support. So, you know, I'm here very much as an educational piece to make sure I can then deliver this back to my clients.
Great, thanks, Victoria. Morning, David.
Morning, Laura. Morning, everyone. My name's David Bohm. I'm Regional Managing Director for ABL Business. We are an independent commercial finance consultancy. We work in a broker capacity, helping businesses find the right type of finance at the right time from the right type of lender, to be honest. We've been involved with an awful lot of the C-bills and bounce back loans. Getting very, very busy now with the cut-off approaching for that. But yeah, we're involved in a lot of different transactions for all different sectors, all different sizes of businesses. And yeah, we're keen to raise profile in the area, but also learn to get sort of like the inside track from AC Mob.
Great, thanks, David. Tim?
Morning, everyone. Fair number of faces that I recognise and no doubt recognise me. I'm Tim Close. I'm a partner in Milstead Langdon firm of accountants. We're largely Somerset based, so Taunton, Bristol, Yeovil and Bath are our main offices in the local area. I'm also an insolvency practitioner like Mike and Neil, so we're sort of dominating this a bit. It's probably because everyone's stuffed full of CBIL loans and government funding at the moment, so they're not going bust. So we're all busy getting our CPD and technical stuff. But to be honest, obviously, like them, I won't echo their bit again. We do exactly the same as they do. You need to stay on top of some of the tax issues as part of that wider insolvency awareness, because I'm an insolvency practitioner as well. But to be honest, the reason I'm listening into this is that when I read it, I saw, Amanda and Lexi doing the lecturing, and I'm a big fan of both of them. So I thought that'd be really interesting. I'll enjoy seeing them in action. That should be good. So I'm really here for the ride to watch the two of them do the presentation. I'm afraid.
No pressure then.
No pressure at all.
Morning, Alistair.
Morning all. Sorry I was a few minutes late. I've been dashing around the county, which is quite a novelty, as you can probably imagine. Just doing some filming for the Somerset Business Awards, which are coming up on the 26th of March, if you're not aware of them. So nice to see so many faces that I know. Nice to see Mike and Neil and Tim and Rob and David, Deborah. Yeah, lovely. Good to see you all. I think from our point of view as a Chamber of Commerce, we're very mindful and very aware that lots of businesses have experienced lots of different financial pressures over the last year, lots of different solutions to those, whether it be furlough, bounce back loans, CBILS, you know, all these different things that have come into play. We need to understand how, looking back, we need to account for those things and make sure that we're reporting the right information, but also looking forward how things like changes to corporation tax and all the other changes that were announced in the budget and will probably come out in subsequent budgets are going to affect businesses moving forward, where the pressure points are going to be, and how we can support businesses with making the right decisions at the right time, rather than leaving it too late and then having to speak to the likes of Neil and Mike, and well, lovely as they are. But much the same as Neil and Mike want to speak to these businesses early to make sure that they're looked after. You know, that's what we need to try and do across the board, isn't it? Thank you.
Yep, great. Thanks, Alistair. Nikki?
Hello, it's Nikki from Wells Cathedral here. This is the first Chamber of Commerce event that I've been to. It was forwarded to me by the Chief Operating Officer, Jackie. So I am the Financial Controller here at Wells. So anything with finance on obviously comes my way. And just like everybody else, I'm keen to keep up to date with obviously the budget, which we all watched last week, and things falling out of that, and how other businesses and organisations are coping at the moment. Lovely, thank you.
Great, thank you, Nikki. Morning, Mark.
Yeah, done it. Mark Blackwell, MD and FD of the Summerfield and Tauntfield groups. We're house builders, developers of commercial property and property owners. Like Laura, I went and listened to Amanda. Well, I listened to Amanda last week at the Clark, Wilmot and Moles do, but never pass up an opportunity to keep up to date and listen to Amanda and Lexi. So that's me.
Lovely, thank you, Mark. A couple left. We've got. Sorry, if I say this wrong, apologies. Ephraim.
Good morning, all. Yes, very good. Ephraim here from Aspire Financial Services. I'm a residential and commercial mortgage broker, so very much operate on the periphery in the financial sector with, of course, the tax advisors. So just keen to sort of jump in and listen to the experts in case there's things that sort of come out of this down the line that are relevant for the conversations that I have with the clients that I'm supporting. So looking forward to it. Thank you.
Great, thank you very much. Alex?
Morning all, it's Alex Spinand here from Airseal Products MD. We supply tyre sealant, so we've been doing that for 21 years throughout the UK, but also all over the world as well. Just interested to hear more about sort of being more efficient with tax, grants and that side of things as well. So yeah, just curious to learn more and be better at what I'm supposed to be doing. Thank you.
Thank you, Alex. And lastly, Vicky.
Nearly there. Yeah, sorry, I couldn't press the button. Hi, I'm Vicky, MD of Incotex. We manufacture office screens, chairs, soft seating, and I'm here just to keep updated, really, and find out more, I guess.
Yeah, great. Thank you, Vicky. Lovely. Nice to hear from everybody. So without further ado, I will hand over to Lexi, who's going to start the presentation. Lexi Shaw. Apologies.
No, that's all right. No worries. Nice to meet you all virtually. So for those of you I've not met before, my name's Lexi Shaw. I'm a partner at AC Roll & Sons, and we're a firm of chartered accountants, chartered tax advisors, serving a whole range of clients across the region. And it's my pleasure to present the Sector Focus event this morning in conjunction with the Chamber. And I'm joined by my tax partner, Amanda Gunter, who I know some of you will know already. So there's a couple of topics on the agenda this morning. Firstly, just to provide an update on some of the coronavirus support measures, a number of changes announced to those recently, so we'll run through those. Amanda will then provide an overview of some of the announcements in the Chancellor's statement last week, picking up on some of the key areas I think you've brought up this morning around corporation tax, some of the changes there in particular. And we'll finish up with a Q&A session. So if you do have any burning questions in relation to the above, we'll do our best to answer them for you. If I could have the next slide, please, Laura. So starting off then with the coronavirus measures. Well, the Chancellor announced a number of extensions to the existing measures in his statement last week. There are a couple of changes to some of those measures as well, and in addition, some new initiatives also announced. So we'll run through those in the following slides. It would be fair to say the stated objective of all of these measures is to try and protect the livelihoods and the jobs of the British people. There are still some gaps in the measures where people fall through or aren't able to access support, so we'll cover some of the options that may be available there as well. Again, if I could have the next slide, please, Laura, thank you. So the first area which the Chancellor covered was the coronavirus job retention or furlough scheme. And it would be fair to say that a year ago, this was a completely new scheme, not something that any of us were familiar with. And I know that payroll and HR departments across the country have spent the last year getting up to speed with it all. The current scheme was due to end at the end of April. And the Chancellor has now announced that that will be extended until the end of September. So the furlough scheme, as it currently is, will continue through to the end of September. For the perspective of any employees accessing the scheme, there will be no changes. So they will continue to receive 80% of their unworked hours, whether they're on the full furlough scheme, in which case it would be 80% of their normal salary, or working the flexi furlough scheme, in which case it's 80% of their unworked hours. And that arrangement will continue until the end of September. For employers, the way the scheme works will remain the same until the end of June. Thereafter, employers are expected to contribute 10% towards the furlough payments, and that increases to 20% for August and September. So another way of looking at that is that employees will continue to get the 80%, and that will be fully funded by the government up until the end of June. But in July, the government will fund 70% of that, with the gap being made up by the employer. And in August and September, they'll fund 60%, with the 20% gap made up by the employer. Employers will continue to remain responsible for any employer's national insurance contributions and indeed any pension contributions. Now, I think anyone who's involved in the calculation will be pleased to learn that there are no changes to the way in which the calculation works. The mechanics remain the same, which is fantastic news, frankly. Some of you may have heard of the £1,000 coronavirus retention scheme bonus, which was previously announced by the government. And this was a £1,000 one-off payment, which was due to be paid in around January for every employee who was retained under the furlough scheme. Now, following the extension of the scheme, this bonus has been withdrawn. There has been talk of some alternative incentive payments being made, but there's no further details around that at the moment. So there really is no more information around that at present. From an accounting perspective, it's worth just highlighting that any payments received under the furlough scheme should be recognised on a separate line item in other income. And I generally encourage my clients to include an accounting policy or some narrative within their accounts to explain what that money is, because it does kind of stand out a little bit for those who are in receipt of significant claims. It's also worth noting that it is taxable income, so it does need to be included as such within any corporation tax returns for businesses. Obviously, on the other side of that, there is the payments to the employees, which it can be offset against, but it is still taxable income for the period, so it does need to be accounted for accordingly. If I could have the next slide, please, Laura. So the other area to talk about this morning is the self-employed income support scheme. And the Chancellor has announced that 2 further grants will be made available to the self-employed. The 4th grant will cover the period from February to April of this year, and the payment being made, or the grant payment, will equate to 80% of the 3 months average trading profits from that self-employment. There will then be a subsequent 5th grant, which will cover the period from May to September. And for the 5th grant, for the first time, some criteria have been introduced around eligibility, whereby if the income from the self-employment has not fallen by more than 30%, the amount which the individual is able to claim is reduced. So in order to access the 80% payment, the self-employed individual will need to demonstrate that their turnover has fallen by more than 30%. If it's fallen by less than 30%, then the payment they receive will be less, and that will be 30% of the 3 months average profits. There remains a cap on the scheme, so that's 7,500 is the maximum payout for each grant, and if you're reduced to the 30% payout, then that will be 2,850 respectively. In terms of the eligibility criteria, these broadly remain the same, and in particular it's worth noting that any self-employed individuals with income of over 50,000 remain ineligible for the grants. However, what the Chancellor did announce was that any individuals who started off in self-employment during the 1920 tax year are now eligible to claim these 4th and 5th grants. So that's quite relevant for people who had started off their business just shortly prior to the pandemic. They are now available, they are now eligible to claim these second 2 grants. And in order to qualify for that, they'll need to have submitted their tax return for that year by the 2nd of March. The way in which the scheme can be claimed is the same as previously, in so much as HMRC will contact those individuals that they believe will be eligible. They write to them and invite them to submit a claim through the online portal. In terms of timing, the 4th grant is expected to be around late April, and the 5th grant expected to be around late July. And as usual, I expect HMRC will put further information on their website in due course. It is again worth noting that it is a taxable grant. So when individuals come to complete their self-employment pages on their tax returns in due course, they do need to include this as taxable income, and they will be liable to income tax and any applicable national insurance contributions when compiling their tax return in due course. If I could have the next slide, please, Laura. So another area which was announced in the budget, which is a new initiative, is the Recovery Loan Scheme. And I think we mentioned earlier when everyone was doing their introductions, a lot of businesses have been accessing the CBILS or the business interruption loans, and also the bank bounce back loans. This is a further new loan scheme, and it's open to all businesses. That's irrespective of their size and irrespective of whether they've already accessed any funding under the CBILS or bounce back scheme. So the eligibility criteria for this are very, very broad. The way the scheme works is that the government will guarantee 80% of the loans which lenders make, and the loan amounts can be anywhere between 25,000 and 10 million. The scheme is due to open on the 6th of April and will run until the 31st of December. And as with the previous loan schemes, there will be a list of accredited lenders who are providing the scheme, and that's expected to be published shortly. The terms of the loan vary. For term loans and for asset-backed loans, the term can be up to 6 years. For overdraft facilities and invoice finance facilities, then the terms are reduced to 3 years. From an accounting perspective, I think it's just worth highlighting that there's a requirement to consider the disclosures here. In particular, if a business has entered into a significant loan agreement after the year end, I would expect that to be disclosed within the accounts as a post-balance sheet event. It's obviously quite relevant generally to the funding and financial position of a business. If I could have, again, the next slide, please, Laura, that would be great. Thank you. So the Chancellor also announced a new Restart Grants scheme. Under this scheme, £6,000 grant will be paid per premises to any non-essential retail businesses, and a grant of £18,000 per premises for any businesses in the hospitality, accommodation, leisure, personal care and gym sectors. And as with some of the previous grants, this will be administered by local councils. So it's really worthwhile, if you think you'll be eligible, keeping an eye out on the council websites. They're normally pretty good at putting more information there as and when these are being paid in due course. In order to qualify, the business needs to be based in England. It needs to occupy a property on which it pays business rates. And the business needs to have been required to close either during the period of the 5th of November to the 2nd of December, or from the 5th of January 2021. And as a result of that closure, the business needs to have been unable to continue to provide its usual in-person customer services from those premises on which it pays business rates. One thing just to highlight on this, because this was announced in the Chancellor's budget on the 3rd of March, and because the eligibility criteria were set out within his announcement, from an accounting perspective, you would actually recognise this within the accounts as at the 3rd of March. So if you've got any businesses with a March year end, this caused some difficulties last year when grants were announced prior to the end of March, but not paid until subsequently. You would actually bring it in as a debtor within your account. So you'd recognise that income if you're eligible as at the 3rd of March. And as with some of the other payments, this is also taxable income for any businesses who are in receipt of it. Again, if I could have the next slide, Laura, thank you. Another, on a similar vein, business rates relief, effectively an extension of this, was also announced. 100% relief will be granted for eligible businesses for the first 3 months of the year, and the relief is 66% for the remainder of the year. The businesses which are eligible are very similar to the Restart grants in that it includes retail stores, restaurants, cafes, pubs, cinemas, music venues, gyms and hotels. The relief is capped at £2 million for any businesses who were required to close due to the pandemic, or £105,000 for any businesses who were not required to close. This again will be administered by local councils and applied automatically when business rates statements are sent out. Thanks, Laura. And then lastly, from the coronavirus perspective, a couple of VAT measures where extensions have been announced. You may recall that any businesses who were due to make a VAT payment to HMRC for the quarter ending, or whose quarter ended between March and June of last year, there was an automatic deferral of that VAT liability. And actually those would have been coming up for payment relatively shortly. Well, what the Chancellor has announced now is that rather than having to pay that deferred VAT in one lump sum, businesses can apply to pay it in 11 equal instalments. I think the really important thing to note here is that businesses must opt in. So the previous deferral was automatic, but to qualify for this deferral payment scheme, businesses must opt in and they have to do so by the 21st of June. HMRC have an online portal where businesses opt in, and if anyone wants any further details on that, just let us know and we can forward them after this morning. Another area on the VAT side of things was the reduced rate of VAT. So the 5% rate for goods and services supplied by tourism and hospitality businesses, that rate has been extended and will now apply until the end of September. And the services and goods which this applies to are very similar to previously. So food, non-alcoholic beverages which are served on site, holiday and hotel accommodation, and admission to certain premises. So that reduced rate has been extended across the summer. From the 1st of October, the 5% rate will increase to 12.5%, which it will remain at until the end of March. And the standard rate would then apply from April of next year. And I suspect there'll be many of us who will be planning staycations across the summer this year. So hopefully this measure will be of benefit to the wider public as well as to businesses operating within that sector. So from my perspective, that's a very kind of high level summary of some of the main coronavirus support measures which are out there. I'm very conscious that there are still some businesses which fall through the gaps, in particular where you've got owner managed businesses where directors, shareholders took their payments from dividends. What I would say is there was a discretionary grant scheme announced over the winter, which is administered by local councils, and that has far fewer eligibility criteria than some of the other grants and measures announced. So if you are aware of any businesses that fall within the gaps, it is worth looking to see whether they can make an application under that discretionary scheme, which again is administered by local councils. So that's really all from me this morning. I'm very happy obviously to take questions at the end of the presentation, and I'll pass over now to Amanda just to provide an update on some of the other areas from the budget announcement.
Thank you, Lexi. As mentioned, I'm Amanda Gunter and I'm one of the partners at iCAEW Sons. Some of you already know me. You will know that I deal with a general practice portfolio as well as dealing with a lot of our complex tax planning. Now, the first thing, I look at this photo of myself and I think, obviously I've aged over the last few years and I also need a haircut. Fortunately, I think everyone's in the same position, so that's okay. But I can't wait to go and get my hair cut again. Can I have the first slide, please? Thank you. Now, although this is an extension to a further relief, Lexi and I did discuss earlier that actually I did need more to say than just a couple of items at the end in relation to how we were going to pay for all of the taxes. So I'm going to cover some of the corporation tax bits and pieces as well. So one of the other extensions that he announced in the budget is that they were going to extend the relief for loss carryback. So at the moment, we've got relief for carryback for 1 year for all businesses. So any business that's making a loss at the moment can carry back that relief by 1 year and claim tax back against the prior year. What we're going to see is that that relief is going to be extended, and it's going to be extended for a maximum of 3-year carryback. Now, it's going to be capped at 2 million per business or per group, and it's going to cover the tax years 2020 to 21 and 21/22. Now, we haven't received all of the details yet, so it will be interesting when we see what the information is in the finance bill as to exactly how this is going to work. But I imagine there'll be quite a few businesses out there over the years that will be looking at this extended relief. And I've got to say, we've already received some queries about it already as to whether people can make in-year claims. Now, for anyone who is thinking about that, because obviously it has a cash flow implication, unfortunately, we don't know yet if we will be able to make any form of in-year claims, but we should be able to find out sooner once we get some information from the finance bill. Could I have the next slide, please, Laura? I will say, normally anyone who's seen this before knows that I don't normally do stamp duty, and this was something that Clark Wilmot covered last time, but just because it's quite a significant issue, stamp duty land tax last year was amended, and what the Chancellor said is that he's going to extend the relief in relation to stamp duty just to help out the housing market for a little bit longer. So we've just got a graph here showing how the stamp duty land tax relief is working. And you'll see that up until the 30th of June, we've got a 0% band for anything up to 500,000. So you can see the relief that was announced last year is going to be extended until the 30th of June to help out with that housing market. Now, instead of it being a cliff edge at the end of June, there is a small change thereafter between the 1st of July and the end of September, so that we can see that the 0% band is going to drop to 250,000. And then once we get to the end of September, we are going to go back to what were the rates before we had any reliefs in there. So from the 1st of October this year, we will see that the 0% band will be 125,000, and we are back to the original rates that we've seen before. Now, hopefully this will stimulate or continue to stimulate the housing market. And it was quite interesting. I had a conversation with my neighbour last night, and they are considering moving just because of this stamp duty land tax relief. So hopefully it should continue to stimulate the market. The downside is people do feel that it may increase house prices when we want those house prices for new buyers where they don't want the increase in the prices. Now, one thing to note, and people tend to forget this a bit, that there is still an additional 3% charge for second homes. So this affects your buy-to-lets and second homes where you are still paying that additional 3% stamp duty land tax. Next slide, please, Laura. Thank you. Now, this was the second item this is the first item he mentioned on how he was going to pay for all of these coronavirus measures. It was the big announcement in the budget, probably halfway through, that tax allowances and thresholds are going to be frozen. Now, he's going to freeze the allowances up until 2026. Now, by allowances, there are a lot of them. Now, you'll see on the slide, I've run through what the allowances are going to be that are frozen. We've got personal allowance, higher rate threshold, the inheritance tax nil rate band, residence nil rate band, capital gains tax annual exemption, VAT registration, and there are more. So starting rate bands are going to be frozen as well, and the list was quite endless on what he was going to freeze for the next 5 years. Now, the amounts that they're going to be frozen at are either their current rate, so the rates they are in this tax year, or what they were planned to be for 21-22. Now, one thing I will say on this is when you think about rate freezes, it doesn't seem to be too significant. You think, oh, okay, that's just something he's going to do for a period of time. 5 years is quite a long time for freezing these allowances. So although it's not a tax increase, in real terms, this can raise quite a significant amount of money. Now, the one thing he mentioned in his budget is that this coronavirus, the costs involved with it, the reliefs that he's provided, those and the grants, is going to cost about £407 billion. Now, when you think the country was already running quite a high debt level before this, the debt level that we're going to have in 2 years' time is significant. Now, he did mention at the time that we were going to end up with a 97.1% debt situation when we hit 23-24. Now, one thing he mentioned in there is that people didn't want to lend. So there were lenders out there that were saying actually 95% mortgages were too risky. If you think that your average everyday lender doesn't want to give someone something for a 95% mortgage on a property, if we have 97.1% debt, it's quite a significant figure. So freezing allowances, when he first said it, it was a question of, is that really going to be enough? I've had a look through the numbers, and actually when we get into years 4 and 5, we do start to recoup quite a reasonable amount of money just by making a freeze to these tax allowances and thresholds. Looking through some of the information that they published was quite interesting in that it was this 5-year plan of how to recoup these costs. Now, can I have the next slide, please? And the other big announcement that obviously everyone heard about was the increase to corporation tax. Now, anyone who knows me will know that anything to do with corporation tax, I get quite excited. So when it comes to corporation tax planning, I heard these announcements and a lot of my colleagues were sending me a message saying, oh, how excited are you getting? And this was quite big news. I think we were all probably expecting some form of increase in corporation tax, but I'm not sure we were expecting it to go up to 25%. So what we're seeing is from 2023, anyone with profits under 50,000 won't see a change. So their corporation tax rate will remain at 19%. Now, anyone with profits over 250,000 are going to see the corporation tax rate increase to 25%. Now, for profits between 50,000 and 250,000, we're going to have a tapered rate. Now, for those of us who are old enough to remember, this does go back some way to where we had a small company rate and a main rate and taper relief. Now, I've got people who are training at the moment doing their tax exams, and they looked at this and like, oh, that's a bit strange. Whereas I looked at it and thought, oh, how exciting, your exam questions are going to be even harder. Now, to soften the blow with corporation tax, he did also announce a super deduction. Now, again, this is something that I was obviously getting quite excited about as to how it was going to work in practice. So what they are basically saying is it's a type of annual investment allowance. But what you're going to get is 130% relief for your qualifying capital investment. Now, to give you an idea of how that works, qualifying capital investment is in relation to your plant and machinery. So where you were investing before in items that will qualify in what we call your general pool, so that would be your main rate items for plant and machinery, you are going to get 130% tax relief. Now, for items that would have gone into something called the special rate pool, so there we are looking at things like integral features, so certain items that would qualify originally for 6% allowances, you're going to get 50% tax relief. Now, this is going to be for a 2-year period where we will see this super deduction, and it was announced to try and soften the blow for the future with corporation tax rates increasing. The government did say that they were hoping this would advance 25 billion in locked up capital over the next 2-year period. Now, we haven't had all of the details in relation to either the corporation tax rates change, how the tapering is going to be done for taper relief in those rates, or how they were going to deal with the super deduction. But from some of the readings, I will say the super deduction will be great initially because you are going to get that increased relief. But I did notice that there was something in there about when you dispose of the asset. So it may be that as a timing saving for corporation tax rather than it being an outright saving. All of these things we do have to wait for further information at the moment, and we are hoping that we'll hear more once the finance bill's gone through so we can see exactly how they're going to work in practice. Now, that was one of the things we found with the budget. There was a lot of headline information that was presented by Rishi at the time, but when you read through the detail, you will notice that a lot of it does say await further information. Further information will be published in due course. So we have unfortunately got to wait a little while, as we would anticipate, considering the significant level of changes that are happening. But as soon as we do hear more, we will be releasing further information sort of through our website, and people can contact us directly. Now, that has been quite a fast run through of everything that happened in the budget and all of the coronavirus measures. I think, did we just get a query from someone at that point? I think I saw something flash up with a query, is that right?
Yeah, Rob had asked when the 130% tax relief starts.
Sorry, say that again, please.
Sorry, Rob had asked when the 130% tax relief starts.
This April.
This April, okay. So as of 1st of?
It will be from the 1st of April, yeah, okay. From the 1st of April. I will say the day after the budget was announced, I actually had my first query from someone to say, so I'm about to buy a tractor. Yes. Should I buy it now or should I buy it next month? Yes. A completely legitimate question. My answer though was, you're not a company. So those things do need to be considered. And the other thing with the capital allowances, it's got to be on new equipment as well. So there are some eligibility criteria. Yeah. And it's those small items that do make a difference when you're looking at your tax planning as well. There are going to be exclusions. So cars, from what we understand, are not going to qualify, because that was something else I got asked. Will I be able to buy a new car? No, I do not think that's going to qualify. There are exclusions to it.
Because I know on the plant and machinery, normally cars, vans and lorries are included, aren't they?
Vans, you'll find, will be okay. Now, okay. This is a question we often get asked, is what is a van?
Right.
Now, HMRC are getting a little bit more upset with the idea of vans. We always used to find double cab pickups were fine, those sort of things. But you have got to be a little bit careful. The things we often find, Land Rover Discoveries, is that a car or is it a van? Okay, be careful with those sort of things because often they will be cars and not vans. And it's worth asking the question before thinking, oh, it's going to be a van.
Yeah.
Now, we think vans will qualify for this 130% allowance, but the cars won't.
Sure. Okay, fine. Rob's also asked, is the corporation tax rate based on gross or net profit?
Sorry, it'll be on net profit. It'll be on your taxable profits. Now, your taxable profits will be slightly different to your accounting profits.
Okay, speak to your accountant on that one then. Absolutely. Okay, good. Did anyone have any kind of burning questions? I've got a couple noted down to kind of get us moving. So I might just point out that I could hear the audible sighs of relief from bookkeepers all over the country that the furlough calculations are going to stay the same, because I know they've been terrific fun for anybody going through that process. I guess a quick question probably for Lexi around the hospitality grants. Are you getting a feel for whether or not that's going to be sufficient for a lot of businesses? I mean, obviously each situation is different, but there seems to be quite a lot of cash washing around at the moment for businesses. Are you getting feedback from your hospitality catering customers on that one?
Yeah, it's interesting, and I think it's as you say, there's no one size fits all. So there are some businesses who actually ended up having a fantastic year last year because there were, once the measures were eased across the summer, that actually they had more bookings than ever. They were busier than ever. They benefited from the furlough scheme from earlier in the year. So there were some hospitality businesses that have actually really thrived, and others who obviously really struggled. I mean, one of my clients is the theatre in Taunton, and clearly the doors are closed, so clearly the grants there aren't really going to cover it in terms of what they need. So it's difficult because some of the measures are obviously a fixed sum amount, and there's no one size fits all. But I think what I have seen is a lot of those other businesses have been able to access funding and grants from other sources, whether that's from the Arts Council or Heritage England. So there are a lot of different options out there. I think those being administered by the local councils are one of a range. So those are kind of almost come through automatically, but it's definitely worth encouraging clients or businesses to look into what other support's available.
Absolutely, and I know from speaking to lots of businesses as a Chamber of Commerce, the discretionary grants that come through from council tend to be dished out on a first come first served basis. So if there are discretionary grants out there, it's worth getting in early, certainly. In terms of premises that were maybe mixed premises with hospitality on one side and maybe another function, is that something that businesses should be aware of?
Yeah, so I believe in most cases the determinations are being made by the local council, but there is scope to appeal those if you feel that you are eligible and you haven't been included, or vice versa. So yeah, again, I think it's a discussion really between the business and the council. The council's got the responsibility for administering those. But they have been really very good in terms of putting guidance and information on their website. So that's really, I think, the first port of call for anyone who's got queries.
Great. Okay. Did anyone have any other questions?
Yes, Alistair, if I may. I'm going to be, if I may be greedy but fair, and ask both Lexi and Amanda separate questions. Lexi, first, coming to you. Obviously, you haven't as yet got the details of the new replacement for the C-bills and bounce back loan, full sort of finance details of how that's going to work. But have you had clients come and take advice when they're taking the old C-bills and bounce back loans? Because Mike and I, and no doubt Tim, in the clients that sadly don't come and see us early enough or quick enough and end up in a formal liquidation insolvency administration process, I'd say pretty much all of them in the last 6 months have taken these loans. Quite a lot of them have then paid off directors' loan accounts or personally guaranteed company debts, which when if the company falls over in the future, is just going to cause those directors personal problems, because we will pursue them for those days. Are you seeing people coming and asking you for advice on those subjects, or are they just taking the money?
Yeah, so it's a mixture actually, and I think it probably changes between the type of loans. So I think the bounce back loans, it's very easy, isn't it, the application process, and the money is very readily available, and it's almost one of those things where I think businesses feel comfortable just going and applying and taking the money and kind of merrily going along. And obviously we'll kind of have discussions with our clients about that when that comes to our attention, but many clients are just kind of doing that off their own back, I guess. I think the CBILS is quite a different process. I think that's far more detailed, far more in depth. They're having discussions with lenders, they're being asked to provide cash flows, forecasts and everything to support those. So the businesses where they're accessing the CBILS loans, then absolutely we've been kind of providing the support behind that. It's interesting obviously that there's now a third scheme being announced, and it's not subject, it's open to all businesses, and it's irrelevant of whether they've made any applications before or not. So it'll be interesting to see how many businesses will take that up, and that's another question I've kind of been asked. Do you think there'll be a big rush to take up the new recovery schemes? I think a lot of businesses already have accessed funding where they needed it, over the summer last year. But I think for some businesses, it may have deferred the inevitable, if you see what I mean, because they've received a cash injection which has kept them going, but actually hasn't then made the business sustainable if it perhaps was already experiencing difficulties. And there's nothing like, the last kind of 12 months for highlighting issues that may have already been there, but bringing them out to the fore. So I would expect, yourself and Tim to probably have a fairly few busy months ahead once some of those, loans are called for repayment. Absolutely.
Lexi, you heard this the other day on a call that we were on with the Bank of England, but I heard a great expression, which was that when the tide goes out, you find out who's been swimming naked. And I think we're probably about to kind of see that come through, unfortunately, with these firms. So, yeah, it's a sensible question. You had another question for Amanda.
Well, firstly, Alistair, keep your trunks on.
Yeah,
and Amanda, it won't surprise you to know that we had a tsunami of solvent liquidation work, entrepreneurs, shareholders trying to avail themselves of the 10%. I call it entrepreneur rate relief. It's changed now, but you hopefully will know what I mean. But were you surprised the Chancellor didn't change that?
I was a bit. I think if anyone had asked me probably last September what I thought was going to happen in the budget, it was a very different answer at that point than what I thought was going to happen after January and February. If we hadn't have gone back into the second lockdown, I think we would have had a very different budget. I do wonder whether he's holding off until next year to do things so that we can get back on our feet beforehand. It was just so interesting when I was reading through the numbers as to how much this is costing and the way they were planning to repay it. Now, the level of debt, 97% level of debt, the one thing he said in his speech is that they need to do something to build a buffer in case this happens again. And when you think about that, you think we don't have that buffer, so how are we going to get that? The things he's done at the moment, they do bring back in money, and I will say you can see that happening. So in the OVR's report that they do a 5-year plan, and you can see actually things do improve in years 4 and 5. That's great. Whether he's going to do something to bring that a little bit faster, I think that's a possibility. So originally, last September, I was thinking he's going to cut entrepreneurs relief, he's going to increase capital gains tax, so he's going to do some things that most of the population aren't going to get too upset about. And most of our clients will get upset about it, but the rest of the population probably won't. So I did think what he'd said changed significantly between what he would have said last September if things hadn't have gone back into lockdown. Anyone who saw the presentation that we did Clark Wilmot the other day will have heard me say that I think there will be more, because I don't think what he's done so far will be enough. So I'll be interested to see what he does. Maybe even this autumn, we might see something happen. Entrepreneurs relief, I think, is on the table. The other things I think on the table, withdrawal of other reliefs, so looking at inheritance tax. The downside with any of those items, they don't raise that much in terms of revenue. The biggest earners have always been income tax, national insurance and corporation tax. So we shall have to see.
Okay. Amanda, Sorry, I
Sounds
did
like
hear
the
that.
country might need some advice on its finances.
Yes.
Tim.
Sorry, yeah, I heard that there's a whole lot of consultation documents coming out later in the month. Do you know which is tax? So I didn't buy a lot of interest to it. You probably know a bit more about that. Do you think we might see some CGT stuff coming out in those consultation papers, or is that misinformation that I was fed?
Tax day, end of the month, tax day. There's a lot of consultations been going on at the moment. The Office for Tax Simplification has been looking at lots of different areas. So they've got consultations going on capital gains tax, on inheritance tax, on reliefs. These consultations are really broad. So they're not saying, okay, these are the areas to focus on. What they're saying is we're looking at everything in the range that we could possibly think of and throwing it out there. I think life will be quite interesting for a tax partner over the next few years, because I think we will see further change. Now, I will give Rishi his dues that actually, if this were to work, I think he's looking at it thinking, well, I'm predicting that we will spend 407 billion. Now, if we don't, and that's slightly lower, then my debt will be lower and my recovery will be faster. So he is working on a worst case scenario at the moment and hoping for a better case scenario. If that pans out, he may be able to continue on the route he's going. He won't know that, I don't think, just yet. We've got to wait and see when life opens up again. Because I think when life does open up, there's going to be an awful lot of us holidaying in the UK. So our money's going to stay here in the UK, which will help our recovery. Only 2 weeks ago, my husband and I decided that, no, we're not going to Lanzarote this year. We're actually going to go to Devon for the summer. I'm booked a place in Devon, so we're staying here. I think a number of people will do that, which will mean that money will stay here. We will see what's happening as the year progresses. But I would say keep an eye on this space for sort of an autumn budget and then another March budget next year. It'll be interesting to see what happens.
Certainly, thanks, Tim. Certainly looking at the fan charts that the Bank of England produced, they're quite, and fairly unusually, I think, for the Bank of England, quite bullish on how quick the recovery will be.
Yeah.
So I hope they're right for a start. But yeah, it would make sense to kind of let the company gather some pace before you start adding some extra costs onto that one. David's popped up in the chat that you're seeing CBILS approval rates below 40% across the market. And some lenders are actually shutting their books now. Is that right, David?
Damn unmute button. Yeah, definitely. I think from a lot of the lenders that we work with, they're working on the basis that anybody who is actually worth lending money to has already applied for it.
Yep.
There's an awful lot of poor quality appraisals coming out. You've got to bear in mind a lot of the funders have been using online portals. You could apply for a 250k CBILS loan, 30 seconds, literally just upload bank statements, bit of audited accounts, management accounts, and an awful lot of the lenders have decided, actually, do you know what, that's not what we want to be doing. An awful lot of lenders have decided they're looking at which brokers they will deal with as well, because they want to be really weeding out the good quality applications and not just taking any old rubbish, should we say.
Yeah.
I think it's probably driven a bit by who's giving personal guarantees as well, because we had the issue when CBILS first came out and people like Barclays were looking for PG. So, giving a PG on £1 million borrowing, that's quite a serious thought. But then when we got to bounce back, under 250 was exempted. So, it was an easier decision for most owner managed directors, I think. And I think with the recovery loans, I think, to my mind, that will be a fairly key consideration of what the take-up's like, plus, to be honest, how rigorous they are in terms of going through an appraisal process for them.
Yeah, very, very much so. We've noticed that banks didn't seem to be that open to business on the CBILS loan side. It was almost like it was a bit of a hindrance for them. So we actually had quite a few referrals from bank managers, and it was also deemed that if you would go to your bank and apply for funding, it would be on your record, even if you took it or not, so that when the time comes in the future and they're looking for additional funding, actually you applied for it before and you didn't get it. So that would then flag concerns, and that would be a trigger for the likes of Mr. Vinicum and Mr. Close to actually be having a word and looking at the restructuring side of things. But also the British Business Bank, who obviously administered the CBILS schemes, they've come down quite heavily on a lot of lenders. There's been a few, should we say, sharp practices going on. There was all sorts of rumours going on about certain funders trying to improve the integrity of their own book by approaching their existing clients and asking them to take out CBILS loans, because obviously you get the guarantee then as well.
David, can I just interject? Because I work for NatWest as a local relationship manager, and it's just really interesting to hear your comments there, because again, for the sake of clarity, I suppose I can only say what's happening at NatWest End, I have to say. But for the sake of clarity, we are very much open for business still. And we are seeing some clients that have definitely had a delayed impact of COVID. And we are still approving CBILS facilities. You know, I personally have approved 2 in the last week, you know, where actually there have been a delayed impact. We're getting MI to show that there's a delayed impact that's been seen, and we are very much supportive of those clients. The application, you know, process at our end is that we will accept any applications as long as we've had an application received by the 31st of March. We will continue to process that application. It doesn't need to be drawn by the 31st of March. As long as we've had an application, we will proceed with it. And that's very much on the CBILS and both the bounce back. But I predominantly deal with the CBILS, the larger ones. So I just, you know, echoed to try and get the message out that I understand what you're saying about, you know, your thoughts on whether banks are open for business. At our end, absolutely we are. And, you know, we want to be engaging with those clients who have had those delayed impacts. You know, we are here to help.
Yeah, that's really good to hear. Appreciate that. Thanks, Victoria.
Thanks, Victoria. Thanks, David. Just a couple more questions that have come in. Rob's asked, do you know the interest rate for the recovery loan scheme?
I suspect it will be in the same way as CBILS, and that it will vary by the lender. And Victoria, you might even have more information on that from your side, but I don't think there's been a kind of headline rate announced, as it were. So my expectation would be that that would vary with the lender and the lending criteria.
Any inside knowledge on that one, Victoria?
No inside knowledge, but Lex is absolutely right. You know, all our CBILS facilities were priced, I suppose, according, you know, from our point of view, you know, from a risk perspective. So it's very much financial driven, performance and so forth. So expectation would be that that will follow in the same vein. But again, from our point of view, you know, we're still waiting for, you know, clarification of the whole recovery scheme. So it's great to hear that it's been launched. I think it's going to be really valuable to businesses. But, you know, we're waiting for that clarification, the pack to come out. And then absolutely what I'd just be echoing is, you know, for businesses to keep up that communication with banks. You know, we are here working, you know, in our, you know, remote locations, but we're here to help, you know, and the one thing that I suppose that I've really learned over the last 12 months is the importance of communication, you know, engagement with your bank managers. You know, we are here to help, and the professional advisors. So, you know, I think Lexi and Amanda mentioned earlier, you know, we've done loads of work with regards to the forecasting, cash flow analysis, you know, and that probably is the most important thing for clients, you know, navigating out of all of this, is to keep on top of that cash flow, to keep that going, the working capital need.
A lot of nodding. So yeah, I think a lot of people agree with that one, absolutely. Quick question on the stamp duty. There's an additional 3%, and just for clarity, 3% on a second property. That's on top of the normal rate that you would see, rather than total. Yeah, thank you for that. Rob had to leave, and Rob is looking at purchasing some new survey equipment under plant and machinery. Would that be also eligible for one of the innovation grants? That's a good question. Don't know if anybody has a line on that, or
potentially. Yeah, potentially it might. Now, the one thing I will say is that anything from looking at it from a tax perspective, anything that you do buy, if it qualifies for a grant, then you may be restricted on what you can claim from that super deduction situation. Probably, Lexi, I'm going to check with you. Is it probably best to go through the council to find out about the innovation grants, or through the appropriate website?
Yeah, I would go through the website for the innovation grants, and yeah, I absolutely echo Amanda's comment. You might want to just look at that or speak to your accountant to see what you're better off doing, because if you're able to qualify for the super deduction, if accessing a grant limits your ability to access that deduction, you may be better off taking the deduction rather than the grant. You might want to just run some numbers on that. Unfortunately, it's still quite early days on all of it, so there's very limited information out there. So depending on the timing of your purchase, whether if you can hold off till there's a little bit more clarity, that might be worth doing.
Okay, yeah, thank you for that. I mean, I'm not fully up to speed with the innovation grants. It was mentioned to me about a week ago by somebody I know, and I just so happened to be looking at investing in some new survey equipment, which is quite high tech, you know, drones and GPS equipment and that sort of thing. So I thought that must be eligible for an innovation grant. I knew nothing about this super deduction at all until I came on here this morning, and suddenly the two clicked together. And I thought, you know, now is the perfect time anyway, because I'm looking at doing that investment. And as you've just said, I think I need to speak to the accountant and say, is it both, or is one better than the other in my instance? So thanks for that.
Great, thank you. And Rob, good to hear that you're looking at investing in the business, bearing in mind the conversations throughout the last year where we were so unsure of which way the markets were going to go and whether or not we'd be able to keep trading. So that's terrific.
Yeah, I mean, we as a business have survived very well through this. We have been extremely busy, can't keep up with the amount of workload, but I was interested then to hear about this sort of delayed impact of COVID. Nobody still knows what's around the corner. You know, the construction industry and the work we do with the Environment Agency on flood mapping and things like that has become a much bigger percentage of our general turnover this year. So we've been a little bit more reliant on fewer customers, but that being said, you know, it's been as busy as ever. And yes, I've got the bounce back loan, which is still sitting nicely in my bank. And now I'm thinking, do I pay off some of my longer term loans with that, which are on a much higher interest rate, or not, as the case may be. So yeah, I've got two decisions to make. Or do I invest it in some new equipment, or
that's something you brought up the other day, wasn't it, Lexi, that businesses were paying off the higher interest rate loans with the bounce backs?
Yeah, absolutely. We've seen quite a bit of that actually, and that's been really beneficial to certain businesses in terms of both their cost of debt or just also, you know, cash flow positions. So yeah, a number of businesses, perhaps where they didn't need the loans, but were able to access them and then use them to refinance or restructure their debt. So
yeah, have a chat with your accountant and work out which way you're going to go, Rob.
Yeah, thank you.
Great. Any other questions? I'm just sort of mindful of time. We're running till 11:15, but anybody else got anything to add? Okay. Thank you very much to Lexi and Amanda. Really good insight.
Yeah.
Thank you also to everybody here, because the questions actually at the end were very good as well, and provided some more colour and insight into that, and help hopefully for the people on the call. Fingers crossed, everything goes smoothly in terms of coming out of this, and you know, we're at the top of the Bank of England's nice fan charts that they produce, and we don't have to go back into this. Hopefully that'll bolster the coffers of Rishi, so we don't have to have too many stringent tax hikes over the next year, 18 months. So yeah, just thank you again to Lexi and Amanda from AC Mole. Great to see you all. Thank you for some intelligent and insightful questions, and hopefully we'll all see you physically later this year. We're looking at physical events as of kind of September. We'll probably do hybrid events for events like this, where there's a piece of knowledge being imparted, so you can either be in the room with those people, or you can tune in to get that useful information. So thank you all. Great to see you all. I shall wrap it up now and see you all soon.
Yeah, thank you,
Thank
presenters.
you.
Thanks very much.
Bye, everyone.
Thank you.
Bye.